Let's go to the trading floor in Chicago for an early look at how the markets are reacting to the jobs report. Joining us from the Chicago Board Options Exchange is Scott Bauer, senior market strategist at Trading Advantage. It looks to me, Scott, that the futures couldn't figure it out and the market can't figure it out. Have you figured out those jobs numbers?
You know, the initial reaction, much like what the market was more in the camp of bad news is good news. And we saw futures, prior to the number, the Dow was down about 50. Automatically, or right away, it went to about up 20 when the news was announced. So it was, bad news is good news. Now, like you said, it's more of a mixed bag. Traders can't really figure it out. I think by the end of the day, we're going to be flat pretty much like we are right now. But, you look in the long run, and what does this really mean? I don't know that you can put a lot of credence into this number or that, for that matter, any one particular number. And the market is so focused now on taking and dissecting every single economic report that comes out individually and focusing in on that rather than looking at the big picture. Okay, so this number, wasn't as good or wasn't up to expectations of what was out there. But everyone is now expecting these revisions. Everyone is saying, well, maybe the market got a little ahead of itself, but this 140 number, it's going to be revised up by 20, 30,000 when the number comes out next month. I think you have to look collectively at what's going on. And when you look here in the U.S., the economic landscape is still decent. It's not fantastic. It's still decent. Does this mean that Yellen may, pull the reins in a little bit? I think that's really the thinking out on the street now is that, the tapering is not going to get accelerated. It's still going to be on the same path that it was, pretty much set forward, but it's not going to be accelerated. And that was, I think, the reasoning behind the immediate jump that we saw in futures. Now we're backing off a little bit. The Dow is down a little bit. But again, trading is thin, volume is thin, and I think by the end of the day, we're going to be right around the flat line.
If you want to be bullish, you would focus on, as you say, the underlying economic environment. If you want to be bearish, some people are pointing to the fact that we made an intraday high yesterday on the Dow and the S&P 500, but didn't hold those numbers. How important is that for a trader or a trading strategist?
I look at the market again overall, and I look at what volatility is doing. And volatility is still extremely, extremely cheap. And when I speak about volatility, I'm talking about the VIX, really, which trades right behind us here. And so what I'm telling people and, when I look at my own portfolios is the market is still in a good place. Yeah, it's had an amazing run. It's still in a good place. Prospects are still to the upside. We are going to grind higher. There's not going to be any sort of explosion. But that being said, with volatility being so cheap, there's no reason not to go out there and buy some protection. Stay in the market, buy this cheap protection while you can. Do this while you can, not when you have to. That's one of the underlying mantras of a trader is trade something when you can, not when you have to. So stay in the market, buy cheap protection.
And I saw a trader put up a big trade a couple of days ago, a bear spread, the 190, 180 yes. Spiders, the SPYs.
Saw the same thing.
That was $11 million. I think they put in either they're really bearish or they got a big portfolio to protect. It looked cheap, though, and that is what you're saying, that protection is cheap, put it on.
Correct. And if the VIX was trading higher, or volatility was trading higher, that same spread that you said just cost, that investor $11 million. If the VIX was trading, let's say, around the 15, 16 level, because of the increase in premium, that $11 million investment would have been considerably more. So again, stay in the marketplace. One of the things that I learned early on as a trader 25 years ago was bulls and bears prosper and pigs go to the slaughter. Meaning, when you have a time like this and you want to get the upside, take your protection. You don't need to hit a home run. Singles and doubles are okay.
It certainly works in baseball, and it works in your portfolio as well.
You got it.
Scott, have a good weekend.
You got it.
Thanks very much.
Same to you.
Scott Bauer is senior market strategist at Trading Advantage, and he was in Chicago. That's the first 15.